Back. Is the AI market in a bubble? That's what OpenAI CEO Sam Altman is warning, saying over the weekend, investors are, quote, overexcited about the AI trade. Joining me here, Post 9, is star Wedbush analyst Dan Ives. He is as excited as his coat is bright, right? I mean, is Altman onto something or no?
Look, I mean, I believe we're only in the second inning of a 9-inning game. I mean, because it's our view on the enterprise side, it's just started to play out from use cases. I think as we go into the consumer and ultimately what's going to be autonomous and really the derivatives, I mean, Scott, it's my view the next 2-3 years, we have a tech bull market, and I think AI revolution, the actual impact over the medium and long term is actually being underestimated.
Is he doing a Greenspan here where he sort of waves the flag, but we don't see the results of the hurricane until years down the road?
Yeah, I think it comes, look, and Altman obviously being the golden child that we see when it comes to AI, I think what he's talking about, there could be some froth at stages or parts of this.
Could be.
But, well, especially when you talk about some of the valuations on some, maybe on the private side, what I see on the public side, I see ultimately demand that's 30 to 40% more than I saw 3-4 months ago. I see a CapEx, ultimately really a transformational CapEx that I view as a fourth industrial revolution.
There's no question about a transformational CapEx. Does the return on the CapEx meet the moment or not? That's what we're all going to be boiled down to. We have built in assumptions. You and every investor who's buying these stocks have done that. It has to result in something where you get a moment like Dan Greenhouse was talking about, sure, when the bottom eventually fell out in 2000.
Yeah, and I think what Dan's talking about, and to me, the last quarter and what we're seeing out there in terms of earnings, it's actually been a validation moment for AI. And it's our view that when we look out over the next 12, 18 months, I think as you look at the second, third derivatives across software, cybersecurity, autonomous, I believe investors are actually underestimating where we believe, look, it speaks to our view where this tech market's going. And I get the skepticism, but they'll continue to prove it wrong, I think quarter after quarter.
Okay, you're adjusting the way that you want to, the way you want investors to look at all of this through your AI 30 list, where you've updated it with additions and subtractions. You've added CrowdStrike, Roblox, GE Vernova, and Nebius Group. You've taken off C3 AI, Cyber, following Palo Alto's deal, Adobe, and Elastic. Yep. So, I mean, I think people can look at Adobe and figure out why you've removed it. Some would question why it was even on there in the first place if it was an AI 30 list when they apparently, according to the investment community and the markets, clearly are being left out of that conversation. But why crowd in terms of AI? GE Vernova is, I think, well known by everybody as to the power portion of this, and Roblox.
Yeah. So crowd, first, when it comes to cybersecurity, I actually think first Palo Alto, which obviously we were reporting later, Zscaler, and I think CrowdStrike, you're going to see AI play more and more of a role in cybersecurity. That's actually, to us, one of the biggest beneficiaries when it comes to second, third derivatives. I think CrowdStrike is not being factored in enough. You talk about some of the infrastructure plays, Nebius, being a core one. And to us, look, when it comes to Roblox, I mean, it's our overview of gaming, what's happening on the consumer side. I mean, you are seeing AI transformation that's happening across the industry. And to us, the whole goal of the AI 30 is to capture based on whether it's software, chips, consumer, autonomous. And what I believe, this is a golden age for AI. It's not just about 3-4 names.
All right. Good to see you. Thanks for being here, Dan.